Welcome back to Factful Finance, where we help you make smarter financial decisions. As the year wraps up, it's easy to let your tax planning slip through the cracks. But did you know that poor year-end tax decisions can cost you thousands? Don't let that happen to you. In today's video, we'll walk you through practical, expert-backed tips to avoid costly tax mistakes before the year ends. Let's dive right in and make sure you're financially ahead. Before we get started, a quick note. This video is for educational purposes only. For advice tailored to your unique situation, it's always best to consult a professional. Now, let's get into it. When it comes to taxes, the end of the year is the perfect time to evaluate your situation and make moves that could save you big. If you're not paying attention, however, it's easy to overlook opportunities for tax savings, and trust me, the IRS isn't forgiving. So, let's go through the key strategies to avoid costly mistakes. First, check your tax withholding. Many people don't realize that they're having too much or too little withheld from their paycheck. If too much is withheld, you're giving the government an interest-free loan. Essentially, you're getting your money back at tax time, but without any growth. On the flip side, if too little is withheld, you could face penalties when you file. Check your withholding now and adjust if needed to avoid any surprises. Next up, take advantage of tax-advantaged retirement accounts. If you haven't maxed out your 401k or IRA contributions yet, now's the time. For 2024, the limit for a 401k is $22,500, and if you're 50 or older, you can contribute an extra $7,500 in catch-up contributions. This move not only helps reduce your taxable income, but also builds your nest egg for the future. Imagine how much more you can save by taking full advantage of these accounts. Think of Sarah, who was able to save $8,000 just by making a few extra contributions this year. Now let's talk about charitable donations. If you're considering giving, doing so before the year ends can result in a significant tax deduction. Make sure your contributions are documented, and if you're over the $250 threshold, get a written acknowledgement from the charity. The IRS wants to make sure you're giving to legitimate causes, so don't skip the paperwork. Another crucial step is harvesting tax losses. It sounds complicated, but it's actually a simple strategy where you sell investments that are underperforming to offset gains elsewhere. This can help you reduce your taxable income. Just remember, you can only deduct up to $3,000 in capital losses each year, but losses beyond that can carry forward to future years. Speaking of investments, review your portfolio before December 31st. Capital gains tax rates can vary based on how long you've held the investment. If you've held it for less than a year, you'll be taxed at the short-term rate, which can be as high as 37%. However, if you've held it longer, you'll pay the long-term capital gains rate, which is much lower, 15% or even 0%, depending on your tax bracket. Here's a strategy that might surprise you. If you're self-employed or have a side hustle, consider prepaying expenses. Let's say you run a small business and you've got some bills to pay. Prepaying expenses like insurance or rent can lower your taxable income for the current year. And finally, don't forget to check for any last-minute tax credits you might be eligible for. The child tax credit, the earned income tax credit, and other credits can directly reduce the amount of tax you owe. Review the requirements for these credits to make sure you don't miss out. Now, let's take a moment to reflect. Think about a time when poor tax planning hurt someone's finances. John, for example, waited until the last minute and didn't adjust his withholding. As a result, he ended up owing an additional $5,000 in taxes that he hadn't planned for. Don't let this be you. As we wrap up, let's review. With just a few simple steps, you can significantly reduce your tax burden and avoid common mistakes that can cost you. Start by reviewing your withholding, contributing to your retirement accounts, making charitable donations, harvesting tax losses, and staying on top of any credits available to you. What's the first step you'll take to avoid costly tax mistakes before the year ends? Let me know in the comments below. If you enjoyed this video and found it helpful, don't forget to like and subscribe so you never miss out on more valuable financial tips that can keep you ahead of the game. Click the bell so you get notified every time we release a new video. We think you'll love the next one on screen. It's packed with more tips to optimize your financial strategies and take charge of your future. Thanks for watching, and we'll see you in the next one.